Disney out with results this week, and ahead of the report, we're taking a closer look at some key discussions around the business. Starting with ESPN. The sporting world goes, there aren't many brands as recognizable, yet the Disney-owned asset has emerged as something of a problem to solve for CEO Bob Iger. Despite the declining fortunes of linear broadcasting, Iger has made clear he's bullish on sports as a media property. Importantly, Disney revealed its financials for the segment for the first time in October.
The move was partly seen as a strategic bid to generate interest around the unit with a view to creating some kind of investment partnership. Some of the commentary around ESPN is sounding bullish. Now, in a note last week, Bank of America Global Research said that the sports network could secure an enterprise value of $24 billion. But it added, quote, the benefit to prospective buyers appears nebulous. Don't forget this morning's announcement of a new CFO. It's all happening right now here for Disney. So where does the story go next? We want to bring in Kevin Tran, the Morning Consult Media and Entertainment Analyst. Kevin, it's great to see you. Lots to unpack here ahead of these results. Let's start with ESPN. We know that's going to be a focal point here in the earnings results later this week. How do you see, or how should Disney, how can it solve its ESPN problem?
Yeah, it's a great question. With ESPN, previously Disney has talked about the challenges with linear TV in general, but sports as a whole still remains something of a valuable asset. And there's been multiple buyers floated as potential suitors for the ESPN asset. But I think that as long as Disney is able to lock down valuable rights for ESPN moving forward, that will help generate interest that could help Disney. So, for example, we know that ESPN has a broadcast deal with the NBA, and that rights deal is set to expire at the end of the 2024-25 season. That will be something very important for Disney as well as other companies to try and lock down a portion of games for. Morning Consult research shows that NBA games are something that uniquely appeals to Gen Z. So in July, 40% of Gen Z adults said that they had a favorite athlete in the NBA, which our data showed was a share higher than that of any other major league or sport.
I mean, that makes it amazingly critical to retain those rights. How much more do you think it could cost Disney if they were able to do so?
Yeah, rights increases are generally something that's anticipated by the NBA and something that is hoped for by the league as well as league stakeholders. But I think that what's going to be interesting for these next round of NBA rights negotiations is just how many more packages will be carved up. So it's generally accepted or expected that during these next rounds of negotiations, the main broadcast partners, Warner Brothers Discovery, as well as Disney, may accept a smaller sliver of games to be able to still be prudent with the financial investment, associated with locking down live games, and with those, with potentially smaller packages going to Warner Brothers as well as Disney, that opens the door for a player like an Amazon or another streaming player to carve out a streaming exclusive package in a way that we haven't seen previously.
Kevin, I want to switch gears here a little bit and talk about the announcement this morning. The new CFO of Disney is going to be Hugh Johnston. He's coming to Disney after 34 years at PepsiCo. And I bring this up because Hugh Johnston was at PepsiCo when Nelson Peltz went on the offensive against PepsiCo, was able to fend off Nelson Peltz then. Now, when you take a look at what's happening at Disney now, we're seeing the activist investor pressure once again, obviously coming from Nelson Peltz. What do you think Hugh Johnston, who's now the CFO, will be the CFO of Disney, how big of a help or what he's going to add here to reshaping the company's business?
Yeah, I think that this will be an important move for Disney just in terms of continuing the road it's going down now in terms of being more prudent in terms of certain investments like streaming. So across the landscape, of course, we all know that the focus now is not subscriber growth at all costs, we're really seeing companies like Disney put a increased emphasis on being able to be, profitable as well as not overspend on content. And I think that, with this new addition, that is something we can look to expect with the company moving forward.
I mean, it comes right after the company had announced last week that it's acquiring the one-third stake of Hulu that Comcast is in control of. So, all that considered, how would you describe the perhaps cost discipline that you expect to be the overwhelming sentiment among the C-suite over the next year, 18 months, 2 years even for Disney?
Yeah, I think that the acquisition of the Hulu stake is emblematic of the overall push of Disney to unify its streaming offerings and be able to offer consumers streaming at an affordable price point. So with locking down an asset like Hulu, it gains the ability to potentially just be a bit more aggressive in bundling. So one of the theories previously why Hulu has remained a US only service is because, taking that service internationally could be something that would inevitably increase the overall price that Disney would have to pay Comcast for that remaining Hulu stake. So with, Disney announcing it will be gaining full control of Hulu, that will be something that will help it bring Hulu more into the fold of its streaming assets, and something that potentially could help consumers access streaming on a more affordable budget as well. So, there's been many price increases across the landscape this year. If you were to sign up for the Netflix premium plan, the Hulu ad-free plan, and Amazon Prime, your monthly streaming bill would be over $50 already. And if you're somebody who likes streaming, it would be easy to rack up a streaming bill of over $80 monthly uh, by signing up to five streaming services. So this is just something that consumers across the landscape are becoming more aware of. And I think that's why there's been more of a emphasis placed on password sharing, and streamers like Netflix as well as Disney bringing up the issue of password sharing more recently. So morning consult data shows that in April, 23% of US adults said that they used a streaming password of someone that they don't live with, which makes sense when you consider a lot of the high streaming prices that I just referenced.
All right, Kevin Tran, we have to leave it there. Morning Consult media and entertainment analyst. Again, we'll be getting Disney results after the bell on Wednesday.